right, good afternoon and a warm welcome from the enmacc offices here in Munich. We are back with a new episode of the Digital Energy Summit. As we kick off the year this time, we wanted to look at longer term price trends, closing 24, looking ahead of 25. So we look into all the major price trends from a perspective of the technical analysis. And not for the first time, we have invited David Linton to join us, the renowned expert on this, and always giving us an interesting perspective and insights. We will, again, as always, have roughly a 20-minute presentation from David, followed by some Q&As. So please participate, put your questions in the Q&A function or in the chat. I will pick them up and we'll have a conversation after the presentation addressing your questions and your points of interest. David, handing over to you. Floor is yours. Thanks for joining us again.
Thanks, Jens. Good to be back. So a little bit about me. I mean, most people who trade energy know me. I run Updata. I record a lot of these videos. I teach technical analysis. I joined Trevor Neal recently at Beta Group doing training. We do a lot of in-house training. We're in Slovenia all next week, training one of the big firms there. And these price targets, which I use a lot, are now on Bloomberg. And I do actually analyze the energy mix and European energy every single morning, and really calling what the price is going to do today and for the next few days. And that really brings me to time horizon, because it's the most important thing in technical analysis, in that if you change the time frame of the chart, you change your time horizon. And this is something that a lot of people forget. And it's one of the powerful aspects of technical analysis that is really hard to do in fundamental analysis, in that if we want to look at the very short term, we can look at a 1-minute chart, we can look at a 60-minute chart. Medium term, we look at a daily chart, we're thinking weeks ahead. And long term, we look at a weekly chart, we're thinking months ahead. And so for today's session, I'm going to be looking at mostly weekly and daily and weekly charts, because we're thinking weeks and months ahead. And for example, this morning we called power, gas and power, and even carbon. Carbon was a bit neutral, but gas and power lower for today. So bearish in the very short term, but bullish in the medium and long term. So I get asked all the time, what's your view of such and such? And I always have to say, well, what's your time horizon? Because I can't answer the question meaningfully if I don't know what the time horizon is. So we're thinking weeks and months ahead. For that, we're going to use daily and weekly charts. The easy way to remember this is days means weeks, weeks means months, hours means days, minutes means hours. That's how we think about the time horizon in the chart. And so the interesting thing in the long term is it's harder to predict where prices will be a year from now using technicals. Maybe the fundamentals are a little bit stronger in the long run. The fundamentals will be right, but often that doesn't help you trade it. But in the short and medium term, the technicals are much, much more powerful. So it's much easier for me to say where markets will be in the coming weeks and months. It's harder for me to say where they'll be this time next year. But so that just gives people a view of the time horizon. So I'm really talking about weeks and months ahead. And before I move on to what we're thinking this year, let's just have a look at what happened last year. It was really interesting because we put this poll out on LinkedIn. We felt that energy markets had bottomed. And I put a poll out on LinkedIn saying, was that the bottom? This was back in the 8th of March, and 445 people voted on LinkedIn. And 73% of the market said, no, we hadn't bottomed. 27% said yes. Then asking a couple of weeks later.
David, very quickly, I can't see your presentation. I need a signal here whether it's just me or is it a wider group. Maybe can someone tell me in the chat? Maybe it's just my setup or... No, I think there's no presentation. Thanks for helping us. We need to try this again.
Should I try and reshare?
Please, yeah. I think we got the time horizons well explained, and
yeah,
to go back, but starting with the numbers. Yep.
Can you see now?
Here we are. Yeah.
Okay,
Wonderful. Thanks, David. Sorry for interrupting.
that's okay. So, and if I go to presentation mode, can you still see?
Yes.
Right. So I talked a little bit about what I do, and this was my time horizon table. So this was just really this idea that medium term we're looking at daily charts, long term we're looking at weekly charts. So in last year in March, on the 8th of March, we asked people on LinkedIn, 445 people voted, had the market bottomed, and we'd been in this downtrend. And this is the interesting thing about the market. 27% of people said yes, and 73% of people said no. I put this up on LinkedIn. I asked, and we were telling our clients that we felt the market had bottomed. And then I asked the question again 2 weeks later, and that shifted from 73-27 to 62% so saying no and 38% saying yes. There was 550 people who voted. And I asked the question a few more weeks later, and by this time it had shifted from 73% no, 62% no, 57% no. Suddenly it was growing to 27, 38, and 43. So the market was starting to get 50-50 split. And I suspect now, if I asked the question now, was that the bottom and are we going to continue going higher? We'd get a higher percentage of people saying yes. So the sentiment had changed. And really, this is the fundamental aspect of technical analysis. And Charles Dow first identified this over 100 years ago, was this idea of a lower high, lower low. And in fact, the reason we called that bottom was after the bottom had happened, was we'd had a higher low and then a higher high. And so in terms of the current trends, one of the things we'll be very much on the lookout for, this is TTF. This is what Dow called the accumulation phase. And then as the trend gets going, you get the participation phase where the market now starts to realize we're in an uptrend. And what we'd be looking for is what's known as the distribution phase, where we see a lower high and then a lower low. And you'll notice all the way up this chart, we've got progressively higher lows. So what this tells us is that every time gas prices pull back, the market or participants in the market are willing to pay more than they previously were for gas. So we are in an uptrend, and you can present all the arguments you like, but for the moment, we are in an uptrend. We have pulled back a little bit, and certainly we need to make a new high above 51 euros. But and I submitted these charts last week, but you can see here that we are very much in an uptrend on gas. So before I go and give the targets for gas, another thing just to think about is, the market is always two sides. So I deal with a lot of consumers of, procurement and people buying gas and power. And so that for them, higher prices is bad. And of course, if you're a producer, then higher prices are good. And it's quite interesting looking at the forward curves overlaid on the chart. We see that the sentiment is that we still see future prices lower. So that's quite interesting that there is still a trend. Now, this is not a predictive, remember, this is the price that people are willing to pay for gas now, rather than that's where the price is going to be. But it is just interesting that a lot of people are really not believing this rise and that we will go higher, because we're not seeing the curve suggesting that. So looking at crude oil, first of all, it's the big contract in energy and something that all energy traders need to keep an eye on. And I find this as a fascinating situation. If I had said to you in 2021, 22, there's going to be a war in Europe, it's going to be a prolonged war, there's going to be a war in the Middle East, and that's looking like it's going to be a prolonged war as well. This is all information before we even really know it. There's going to be sanctions on Russian oil. There's going to be ships diverted out of the Suez Canal. There's going to be hijacks in the Straits of Hormuz. All sorts of things going on that really, at this point, if you knew all that information, you would have said, well, crude oil is going to be like $150, $200 a barrel. And the interesting thing is, it's actually fallen. So it's really interesting that and I get this quoted to me all the time, but all the problems in the world, but the chart is actually pretty bearish. Now, we have seen the last week or two a really quite big move in oil, and this descending triangle, one of the classic patterns, is breaking the wrong way. But this $70 level is the absolutely critical level to watch this year. So all energy traders need to just be aware of that $70 level for Brent crude. I was actually giving a training course at Aramco in London when we spiked just below $70 momentarily, and this was a really interesting time for the price. And this is why this is a weekly chart, so it's long term. Up here we're saying long term. So we do just need to keep a handle on the fact that there is still potential downward pressure on crude oil. And lots of people will tell me that's because of demand in China and all sorts of reasons. But as a technical analyst, I don't really care why this is happening. It's just that the chart is potentially still bearish long term. If we fall through 70, just think about what that means. All these people who've been consistently buying at 70 are now underwater. So, that's something just to keep an eye on. Having said that, the long term is still quite bearish. We have seen medium term price targets. And again, I submitted these targets, these slides last year. We saw a thrust target in September that produced an upside potential to 88. We saw another little target given in December to just above 80, and that's been met already. And then these are the resistance levels. So there is lots of resistance in the mid 80s for crude oil, and it's got to battle all of those previous levels. That's one of the things about recovery. You've got to battle all the previous levels of resistance to go higher. So our call on crude oil is still, it's hard to be pretty bullish on crude oil because it's a long, slow recovery if we are going to build a new uptrend, and that $70 level is really critical. So we're not seeing massive upside potential for crude. We do have big downside targets if we fall through 70. And in fact, just from a technical analysis perspective, that move there, you go sideways, you would expect another move, and that puts crude oil back to 30, 40, $50. That's very, that's hearsay, and really, because we've got to wait for that 70 to break. And we know on crude oil that the round levels are really key. So at the moment, 80 needs to hold because that's the level that we're in. And I think this morning we've actually been nudging, and certainly on WTI, we've been back in the 70s. So let's look at US nat gas. And this is a really interesting chart because here we are seeing breaks to 2-year highs. So multi-year highs is a very strong sign in technical analysis, and we've got fewer resistance levels to fight here. So, we've gone really above 4. We've been playing with this $4 level on US nat gas. We called it neutral yesterday. We called it bullish again this morning. We are seeing US gas strengthening. And again, people will tell me that's all because Trump coming in and all the reasons why. But the reality is a cold winter. But the reality is on this chart, a very long-term chart, we are breaking into new ground. And, that's strong for the price globally. And equally, we had upside targets, one back in May given and when virtually met, another one given in September that was nearly met, and more upside targets, and they're all being met. So price targets being met, where you've got buying thrust producing potential, if those targets are being met, that's really significant. And this is the previous high. If I go back to that chart, we see here this the previous level, 363. This 363 level was where we saw the price really seesaw, and then we broke higher. So really significant here, and we seem to be holding that 4 level. So that's bullish for US gas, which then takes us to Dutch gas. Now, with TTF, what I've had to do here is apply a bigger unit size of 1% of the price. And so these targets are all generated. They originate from point and figure charts. These targets are all generated, and you can see the targets have been progressively met, given off the bottom, and progressively met all the way up. And now we're waiting. Well, we've got a new target to 62. That was given back in October. And that was a big move in October. And at the time, when you're 42, you just say 62, that's ridiculous. But then we're nearly halfway there. And we've got a new target. If we make a new high above this 51 level, we've got a new target to 75. For the moment, if we make, and the key thing to remember, like we talked about crude oil going below 70, here what we're talking about is if we go above 51, we've got a potential of another 10 euros upside. Now, these are medium-term charts, and so the way you would look at that is also going to your shorter term, your 60-minute charts, and seeing what intermediate targets, because you can see that it's not a straight line. You know, we pull back, we go higher, we pull back, we go higher. The trend direction is suggesting that into the summer we could be higher still on gas. And for the moment, there's no sign that this trend is ending. Notice that we've got previous levels of resistance at 54 and 56, 54.30, 56.10. Those are the previous levels of resistance. So we wouldn't be surprised to see the price struggling at the next high point, which will be maybe 55. So we break through 51 and then we edge to 55. And this is quite a big resistance level to fight. So it is not a given that we go straight to the target. Prices do struggle, as we just saw on that US nat gas chart. So for the moment, more upside on Dutch gas. And if we can break higher, potentially another 10 euros upside. I'll talk really more about this 60 target more than the 75 target, because we've got to get to that one first. One thing we can say is that mathematically, we've got to get to this nearer target before we start looking at the bigger target. And this one is not activated yet. That target will turn from orange to green once we make a new high. So German power. So gas, we're bullish, and if we make new highs, we're seeing potentially at least another 10 euros upside. German power, this is a weaker trend. So I've overlaid the TTF chart, and we're seeing here this is a weaker trend, and it is still progressively making higher highs, but it has wandered sideways. We are just seeing that it's starting to catch up, but it hasn't been as strong as gas, and we are in a little bit of a sideways range, and that then leads us to think about the range and the targets. So we've got a very strong resistance at around 120. That was a previous high, and we've obviously struggled to hold this 100 level, which is psychologically important for the price. But if we break 103, well, certainly if we go back above 100, we activate a target to 124. Now, a lot of people go, that sounds crazy, but we know we've got resistance at 120. So what I'm saying here really is if we break above 100 and certainly above 104 to make a new high, then 120 is the place that we would look to, both on the target and on the resistance. So that's really quite key. Having said that, if we make a downside target, notice we had a little mini downside target here that was met. If we have a downside target, then we could see prices coming back to this sort of support level around 76.90. We've got one here at 73.75. But so we're really waiting for the break. If we break lower, this target turns red. If we break higher, this target turns green. I'd favor the upside, primarily because of what we're seeing in the whole mix and looking at gas. So, but we'd have to wait for the break. And again, if you want a heads up, you look to your shorter term charts. And if your shorter term charts are giving you targets above these levels, that's a little bit of a clue that we're going to break higher. So last of all, we look at carbon. And here we just see this amazing situation where in 2018 we were running higher and higher and higher. We hit resistance at 30 euros. Very hard to think back to that level, and then we broke and we just ran, and we ran and ran and ran and ran, and we got to around 100, and we just really couldn't break this 100 mark. And then we've been in the doldrums, and a lot of people struggled over the last couple of years trading carbon because we just lurched lower and went back all the way nearly to 50. That's a 50% retracement. And now we are actually breaking higher on carbon. So carbon is actually starting to look really quite strong again. And here I've shown the trend. This is the gas trend. This lighter one is the power trend. And we can see that carbon is really catching gas. And so it's starting to look more bullish. We look back to these levels, 78, 81, all of these levels, and we are breaking these levels, and we're pushing higher on carbon prices in this week. So carbon is looking particularly strong shorter term, and medium term, we've got targets. You can see here we had a downside target that wasn't met back in early last year. A downside target not met means bullishness crept in, and so that becomes less bearish. And then we had an upside target which was nearly met, which is more bullish. And then we had a consolidation phase for most of the year, had a new target given October that was nearly met. And again, this target to 105, given that we've got resistance levels, all these levels here to fight, and 100 is certainly a struggle we've seen previously, but there is good upside on carbon, and it's looking like it's going to have a very strong start to the year. So that's it really. We see the TTF trend looking very strong. What we'd be looking for an end to that trend is a lower high as a warning, and then a lower low as a confirmation that the trend has ended. Power, we need to see that 100 level regained, and 120 might be a ceiling. And then carbon, that's looking pretty strong. As I said, I analyze these instruments every single morning. So if you want to get these reports, just email me and I'll send them to you. And if you want any training, come talk to us. But that's my analysis, just a simple analysis on gas, power, and carbon.
Amazing. Thanks a lot. Really great run through all the commodities, some with stronger trends pictures than others. Want to go into the questions and encourage the audience to participate. So please let us know what is of interest to you so we can dive into. There were a few questions already coming in a little bit regarding the technical analysis. Sometimes shown the green arrows of upward trends, but you could imagine as well at the same time some existing downward trends in there. What dominates? You say sometimes hard to tell.
Well, I mean that crude oil chart is an interesting aspect because there, if we did break below 70, we will start to see targets much lower. That's a very critical level to break. If I go back to that crude oil chart, it's bullish at the moment, medium term, but the long term is if we break that 70 level, then we could really see the price testing new floors, and I would say that would have implications for European power and gas. Crude oil suddenly falling, the market would struggle to belie that for very long. So, if we look at US nat gas, for example, if we saw crude oil breaking lower and falling much lower, then we'd see that sentiment spilling over into gas prices. So at the moment, that's not happening. And at the moment, US gas is looking very bullish. And if we look at, Dutch gas or TTF, again, if we make a new high, that's looking, again, very bullish. But what we will see, and on the shorter term chart, so this morning, we were giving downside targets for today for Dutch gas. So there are downside targets, but they're much closer because it's a much shorter term retracement. But for this seminar, what we've really done is focused on where prices are going in the weeks and months, and really months is where we're looking. Where are we going for the year?
Yeah. Is there a certain direction of how to look at that? You start with more the long term and then you go more short term, vice versa, or is there?
Yeah, so normally you want to look at the weekly charts first, because the longer term trends dominate. And so what we're seeing with crude oil, for example, is we're seeing this is still a downtrend long term. It's below the Ichimoku cloud. For those of you who follow me on cloud charts, it is in a downtrend long term, but medium term, we're starting to see new upward targets and a new uptrend potentially developing. This is nowhere near as developed as that TTF trend that started last spring, but we might well start to see crude developing a new trend. There's no clear signs that that's happening yet. But so we'd normally start with the weekly. You're looking at the weekly chart. That's your long-term view. And then you look at the medium term, and you're thinking weeks ahead. And then you go to the 60-minute chart, and you're thinking days ahead. And what you'll find is the shorter term trends turn first, because they're more sensitive. But you get trends within trends, and the longer term trend normally dominates. So in the case of TTF, if I go back to that trend in TTF, what you'll notice here is big moves to the upside, smaller moves to the downside, big move to the upside, smaller move to the downside. So progressively we're going higher and higher and higher. And so the trend state is what really counts. We're seeing bigger moves to the upside than we are to the downside. And people ask me, well, why is that happening? And it's really simple from a technical perspective. More buyers than sellers. More people are buying than selling gas.
Yep.
That's the demand.
Yeah. And then following the logic, moving from one target to next once it's reached, yeah, and triggers the next one.
Yeah. But the thing is, you need a pullback in price to lock the target. Pullback in price is healthy because you want that pullback for the trend to continue. If you look at something like Nvidia that's just going up and up, or Bitcoin that's just going up and up and up and up and up, when those trends become unsustainable, that without the pullback, you're not getting the next leg of the move and the trend. So these pullbacks are really what lock the targets, and then when you move higher, you activate the target. So it's really quite important that we do get the pullbacks in price. That's how the trend looks. If I go back to that original chart here, you can see this is like the channel of pricing. And every time we just form at a higher level, a low, and every time we're going to higher levels. So this is really a classic trend.
We get just one for the American gas. We have just one question where participant asks as well, do we see seasonality in these kind of charts? Is that something you have to consider in a gas market?
Yeah, so I always say we do a lot of work on seasonality, and I didn't have time to cover it here, but I always say you can't bank on seasonality, but you shouldn't bet against it. So, we're not surprised to see, price, especially on gas, we're not surprised to see in the winter moves to the upside, shocks to the upside because of the time of year. But don't forget this trend got going all through last summer. So, and then people say that's because storage levels are not quite what they were, or there's all sorts of reasons why people will tell me that. But the chart represents everything that everyone already knows about the market. So, it is fair to say that we do see, but if you look at US nat gas last year in the winter, it fell. So, and people always talk about crude oil and the summer driving season. That was a well-known relationship for a long time. And it used to be that it would go up in the first half of the year and it'd fall in the second half of the year. Well, that relationship's sort of broken down as well. And we've even seen relationships between correlation of the dollar and commodities. That was always a strong relationship. That's changing as well. So the thing about correlation is it changes all the time. Seasonality might work better one year than another. So I don't think you can bet against it, but you can't probably rely on it.
Yeah. You mentioned correlations here. In the longer run, you could say all commodities follow a bullish outlook. Just German power is a little bit an unclear picture. How do we make sense of that from a technical perspective?
Yeah. So originally, go back 30 years, it was really very simple before we had energy trading and risk management. 30 years ago, the cost of electricity was the cost of the gas. If the gas price went up, the electricity price went up. It was all very simple. But now we've got multiple inputs with carbon and all the other things that are going on. And we've got people trading these instruments financially. So you've got hedge funds, trading gas on ice. And, they really don't, they're not connected to the need to generate. So it follows, as I said, with that crude oil chart. If crude oil fell from 70 to 40, well, then that is going to have an impact. That's going to have an impact on gas prices. But you need big moves to the downside for that to actually start filtering through to gas. And equally on power, we expect that we will see power catch up. As I said, if we go back to that, this is the three instruments, if you like. Gas has been the strongest, the clearest trend. Carbon is now catching up, and that's starting to look, getting near gas, and that's pushing higher. At the moment, power is the laggard, but it's still an uptrend. It's just not as strong an uptrend, and we wouldn't be surprised to see that dragged higher. And as I said, we break 100 euros, certainly 105, then we see upside potential to 120, and then 20% upside on power prices. That's going to start looking like a stronger trend, isn't it?
When we were preparing, I was basically betting on one question that we received. It's about the summer winter spread, and maybe a few words on this, because dominates a lot of
Yeah,
discussion.
I mean, I do look at summer winter, but for mostly, I'm looking at where the liquidity is, and that's in the front month. And so again, if the front month keeps going up and up and up, then summer winter will, to some extent, will be dragged up with it. I mean, there is a divergence at the moment between the two, but these divergences tend to be temporary. The overall trend for gas markets at the moment is up. And so I don't expect to see that divergence holding for long.
Yeah. As there was one good question from Christian coming here, whether let's say yeah, weak volumes on TTF, especially recently in December, can this be a sign of a weakening trend if volumes are?
Yeah, so again, there's only so much time we have here, and in when we do training, we go in-house and we look at all of these things in much more detail. And one of the key things we look at is what we call on balance volume. And what we're looking for is signs of divergence where the volume is falling but the price is continuing to rise. It's not a sell signal as such, but it's a warning that maybe this is not volume driven, and so these moves to the upside are weaker. But then the volume can kick back in. So
Yeah.
you know, but we do look at volume, yes.
And would you, I mean, there's lots of discussions about volumes of TTF from financial players versus more physically driven participants. Is this
Yeah.
something you would consider as a good signal as well?
Yeah, I mean, in fact, I was at a seminar in London 2 nights ago, and head of commodities at one of the big banks said, our chart for the year is TTF, and there's banks, they're commodities division of the bank, and they're very bullish on TTF. No big surprise because the trend is really strong.
Yeah.
So, there's an example of financial players looking at it very differently from, um, people who are trading
Yeah.
it physically.
Yeah. What's the relationship between technical analysis and the behavior of algos? Is this more reinforcement? Is this contradictory
Well,
cases?
yeah, so systematic trading is certainly becoming much more popular, and certainly for products traded on ice, like TTF, which has become very liquid. There is an element, but you need to remember that all those systems are programmed by people, and the people, are inputting, you know, fundamental or technical inputs into those algos. So if you like, someone has programmed it to just spot what the technicals are doing. So I don't think it has a massive impact. Still the market is buying and selling, and there's more buyers and sellers, which is forcing the price up.
Mhm. So even if you have some trend following algos, you wouldn't say that I'm very pronounced now, but the technical analysis is not getting a better predictor of market trends now that there's more algos in the market. Would that be not a fair statement?
Yeah, so I mean, and everyone's talking about AI, but again, markets are human emotion. It's the balance between buyers and sellers, and I can tell you when I talk to procurement people, the big question is, should I buy power now or should I buy it later?
Mhm.
And so everyone has this fear of getting it wrong, or not being in, not buying at the right levels, and so those emotions of fear and greed are in the charts. And algos effectively are programmed technical analysis. I mean, you get some quant algos for the very short term, but uh, you know, the chart represents everything that everyone knows about that market. And in the case of algos, that's been programmed by someone who's said, well, if it does this, then that.
Mhm. Mhm. But there's a lot of speculation and opinions about sometimes TTF not following the physical uh, data, if you wish.
Yeah.
Is this something you have a comment on, or we're just saying, hey,
Yeah. Well, the
just
fundamentals become right eventually. So,
yeah,
when gas prices, I mean, if I look at US gas, US nat gas was at one stage at 11, $13, and it fell and it fell, down to nearly $1. And people say,
mm,
oh, well, that's because of shale gas. But at the top, no one was talking about shale gas. It always becomes clear at the end.
yeah,
And there are reasons why these prices are rising. But from a technical perspective, we don't really care why it's happening. We're just following the effect rather than the cause. And it just represents everything that everyone knows. And the big money is progressively buying more gas.
We get as well questions, and I guess it's as well not surprising, about potential political events happening in 25.
Yeah.
Yeah. End of the war, yes, no. Does it
Yeah,
have
as I said on that crude oil chart, what if I had told you, if you just go back to, back into the middle of this chart, when crude oil was around $90, say, or nudging 100, what if I told you all that information that we now know about the world? You would have just said, crude oil is going to go much, much higher.
Yeah.
But it hasn't.
If we think about more these kind of binary or digital events, is this something where you would say this is just a decision between an upward and a downward trend, which we see?
Well, I think the key thing is the market prices in fear and everything that it knows. So, if we talk about Trump, for example, the market has priced in already everything he's been saying and everything we're expecting. It's what we don't know. And there's no way of knowing that, whether you use fundamentals or technicals, there's no way of knowing that. We do, with technicals, have an advantage of critical levels, and if we break those levels, then we know that's significant. So, what I'd say is, sure, and this is especially true with something like carbon, where there might be a change in the structure of the contracts, etc. There's nothing you can do to preempt the political, and if you try, the risk is you get it wrong. So yes, but nothing will help you there. It's all in the chart. The chart represents everything that everyone knows. So if I look at TTF, even if you're one of the biggest players in Europe in TTF, and you feel that you've got information or you know information, it's in the chart because almost certainly you've been trading on that information. So the chart represents the smart money. It represents everything that people are putting their money to. So the political aspects are built in as far as I'm concerned.
And now maybe as we are on the most interesting chart for most of the participants today,
sure,
the impossible question, where does it end? So if you have such a strong basically trend where you go from high to high, and where does it end?
Where does it end? Well, certainly we're expecting a struggle in the mid-50s because that's where we struggled previously. So, we wouldn't be surprised to see the price struggling there. We can't easily call the top of the market. We've got targets. You can only really tell when the market has topped when you've started to show a turn. So here we saw a high, then a lower high, and then over at this point, December 23, November to December 23, we start to realize we've had a lower high, a lower low. That is the sign that we're in a new downtrend. And so what we'd be looking for, remember I did that, we did this with clients first. What we'd be looking for is a change in the reverse of this. So we'll see, if you like, a lower high and then a lower low. Notice here, all the way up, there hasn't really been a significant low that's lower than the previous significant low. If we see that, then we could say the market's top. So that's the thing that people need to be on the lookout for, is the lower high, lower low scenario.
Great. Fascinating. And thanks a lot again, David.
My pleasure.
I very much enjoyed it again, as always. Fascinating to run for all these markets and build opinions on how this may turn out in 25. Thanks everyone for participating and adding to this conversation with questions. I'm sure we'll bring you back and may bring back as well the old slides and compare a little bit how things actually did turn out. Thanks, everyone. We'll have more webinars this year, as you will find on LinkedIn or for our email mailing. We'll inform you about that. Hope to see many of you, not only in the webinar, but as well on eWorld. And thanks you very much for attending today. Thank you, David, as well.
Thank you. Bye, everyone.
Pleasure.